I'm probably going to take a hit on this one as far as, I guess, copyright infringement, but I don't mind taking the hit only because the information that is going to be presented here is that important. Donald Trump has a bunch of idiots surrounding him and working for him. And if you just take what half of these Joe Jackoffs say as the truth, you got serious issues. I woke up this morning and I scanned through most of the cable news networks, and I just happened to come across CNN, which I normally record, and I was thankful that I did. You're going to have Stephen Moore, who is a former Trump advisor, financial advisor, I'm sorry, a former Trump economic advisor, getting on cable TV and basically lying, but he ran up against Catherine Rimpell, I believe her name is. You'll see it on the bottom of the screen. And she basically handed his ass to him. And at the very end of this particular segment, you know, this guy basically just straight out lies. Now, I'm gonna watch this thing roll, but it has to do with inflation, hyperinflation, and the fact that Trump is attacking the chairman of the Federal Reserve, which he put into place because the previous chairman, whose term was expiring, was, in his opinion, too short for the job. Now, because this guy, in my opinion, is doing the right thing, i.e. slowly raising interest rates, and he probably is not going to raise them any further, but he's raised interest rates about 3 times, a quarter of a point each, in order to give himself some cushion in case the economy, the U.S. economy obviously, does slow down, and he'll have some tools available, i.e. lowering interest rates, in order to prime the U.S. economy to help to stabilize it if the economy slows down. And basically raising and lowering interest rates are the only, or one of the few tools that the Fed has in order to, help the U.S. economy. The other thing is, in combination with the Treasury Secretary, pumping more money into our system, which devalues obviously our currency, but it creates more availability because it increases the money supply that's out there. Increased money supplies normally lead to the ability for people to borrow more money. So anyway, I'm going to run this, and then I'm going to stop it every time I feel necessary to try to break down the fallacies that this guy, Stephen Moore, is sprouting. Here we go.
Wild ride on Wall Street, and we're only looking at the last few days. This week alone, we saw the worst Christmas Eve in the Dow's history, followed by the index's biggest single-day point gain ever, and more gains yesterday. So is the volatility really here to stay? Joining us now, Washington Post opinion columnist Catherine Rimpell and former senior economic advisor to the Trump campaign, Stephen Moore. Good to have both of you with us. As always, volatility really is, anybody I speak to will tell you, this is really the new normal, and part of that is the fact that we've been obviously in a bull market for nearly 10 years, so it's going to happen. What's fascinating, though, is the president's attention here and what we saw from him at the beginning of the week on Monday. Tweets bashing the Fed once again. We see that massive 1,000-plus point drop. We don't hear anything from the president when markets reopen on Wednesday. Then we learned he sees the success of that Wednesday trading day, starts making calls from Air Force One on his way back to the States. Steve Moore, I'm wondering if the markets are starting to pay closer attention in some ways to what the president is saying and doing.
Well, sure, and look, let's not forget that the market, now is up about 20% since Trump was elected, so he's been very good for investors. There is turmoil, and by the way, I think you're going to see a lot more of this volatility over the next couple of months. I mean, this isn't the end of it. I think the biggest factor of all is clearly the latest developments in the trade war with China, because that has huge implications for the global economy. The Fed did make a major mistake a week and a half ago, and I think Trump was very right to call them out and say this
In
was a
calling
boneheaded.
them out, though, Stephen, we saw a 1,000-plus point drop.
Well, wait, hold on. Let's get the chronology straight here. The drop in the stock market, the severe contraction began the moment that Jerome Powell opened his mouth in that press conference and started announcing these rate hikes. And those
That's
were
not true.
substantial. Yes, it was. It went down 700 points during
No,
his
markets
speech.
have been falling since September. They're down 15% since
Yeah.
September.
Actually, you're right about that. In September is when the first rate hike, both of the rate hikes were unnecessary and have caused deflation in the economy. And I think
There
that
is
the
no,
biggest
wait,
danger-
I want to stop you there. Because you said this last time I was on with
Yeah.
you. There is no deflation.
Yeah, there is.
No, there is not. You look at the
Look
consumer
at the
price
commodities
index.
index.
That's not, no.
Look at the commodities index. It's down-
Soybean
it's down
prices are falling
10%.
because of the trade war, because China stopped
they're
buying
not.
our soybeans. Yes.
All right, and she's absolutely right. Soybean prices are dropping because of the trade war we have with China, and the soybean farmers are screaming blue murder, and that's why Trump had to stick in, I believe it was about $7 billion of aid to the farmers because of the drop in the soybean prices and also the other agricultural commodity prices. So this guy is full of shit. Now, he initially went on and said a major component of the problem is the trade war that we're in with China. He was right about that, so now he just reversed himself. But soybean prices are dropping because of the tariffs that China instituted in retaliation to the tariffs that we put on their products coming into the country. And I believe the soybean tariffs are approximately 25% that China has instituted. So this guy, you know, he's full of shit.
Absolutely are.
Wait a minute.
And besides, deflation,
How is it trade
deflation.
war?
No, I want viewers to,
It makes no sense what you're saying.
So what if guys, nobody can understand or hear what either one. Stephen, stop for a minute. No one can hear what either one of you saying when all you do is talk over each other. Finish your point, Catherine, then Stephen, you can have the floor.
If you look at overall inflation, according to the CPI, according to PCE, the PCE core index, which is what the Fed actually looks at, we're at about 2%. If you only care about like soybean prices have fallen because China stopped buying our soybeans. That's why soybean prices are down. That does not reflect overall inflation, and I think it is completely irresponsible for you to tell the public things that are not actually correct.
So
She blew him out of the water because, as I stated, soybean prices are down because of the tariffs. But overall inflation is, and she's correct, approximately 2%. That is not any type of indication of us getting ready to go into a hyperinflationary position.
I'm old enough to remember when 10 years ago, during an actual deflation, you went on TV on a rival network and said we were about to have hyperinflation and told the Fed that it was irresponsible then for them to keep rates low. And now we have normal levels of inflation, not deflation. Deflation, for viewers out there, means prices are going down. If you go to the supermarket, prices are not going down. When we have normal inflation, suddenly your hard money ways have disappeared, and you're claiming that the Fed should pump more money into the economy. That's just, it's totally inconsistent, and it's totally irresponsible to make up numbers.
I'm not making up numbers. It's not. I'm looking at the index of not just one or two commodities. I'm looking at 35 commodities. They're down by 10%. It's not just
That's
soybeans.
not
It's
overall
not wheat.
inflation.
But commodities are the one thing that remain constant over time. The reason that you
That is absolutely not true. By the way, folks, soybeans are a commodity, wheat's a commodity. Guess what else is a commodity? Oil. And we are exporting oil now, okay? And because there's a glut of oil on the world market, the price of oil is down. I don't know how many of you guys drive, but if you do and you go to your local gas station, you should see noticeable reduction in the price of gasoline. So again, this guy is full of crap.
price rises and things like telephones is because a telephone is better today than it was a year ago. Because of
Phones are actually cheaper, but okay.
And phones are actually cheaper. So again, this guy is pulling bullshit out of his ass, and he's on TV sprouting this stuff. And if you're not knowledgeable about these things, you might believe this guy. But this chick is on the money. She is cutting him a new asshole.
I mean, the bigger point here is this. Yes, there is a lot of volatility in the market because we have a president who is a disruptor, is a guy who came to Washington to shake things up. That's why he won the election. Now, do I like trade wars? No.
Yeah, volatility in the market, because every time he opens his mouth, he says something that rattles the market, that rattles Wall Street, like pulling troops out of Syria. That ticks off Wall Street. Like reducing the number of troops in Afghanistan. That ticks off Wall Street. Like looking into firing the chairman of the Federal Reserve. Obviously, that ticks off Wall Street. Then you throw in the operated results of various companies when they miss their projections on sales and bottom lines, and yeah, you're going to have some volatility, and that's why the stock market dropped that 1,000 points, because stupid ass Steven Mnuchin calls all the major banks to ask them if they have sufficient liquidity. What kind of a question is that? That makes people think, and it was something else that he said, but that makes people think that there's a problem when there really isn't any, and the market is reacting normally. And that also precipitated that 1,000 point drop in the stock market. Anyway, let's continue.
I don't think the markets like them, but I do think if Trump can pull this out, and I think the American people are behind Trump on the China trade war. I mean, this is a dangerous country that is involved in a lot of nefarious activities that we now know, and they've been cheating and lying and stealing. And I think people, applaud Trump for finally calling them out and saying we're not going to take this anymore. But it would be great for the markets if he could pull this out and get some concessions from China. And if that happens, by the way, I think the market will boom.
Now that is true. If Trump can pull his chestnuts out of the fire, and we can get a decent agreement, an enforceable agreement with China over cheating and infringement of intellectual rights, that would be tremendously helpful, particularly for our economy. On that one, you have to give credit where credit's due. That statement was correct.
Look at what else is happening here. So I know, Stephen, you said earlier this week the Fed absolutely did the wrong thing. Yeah. But we have heard from Kevin Hassett coming out and saying, listen, Powell is 100% safe. We've also learned, Catherine, that... Oh,
and by the way, Kevin Hassett, again, giving credit where credit's due, Kevin Hassett is one of the few economic advisors that Trump has that is worth anything. He basically can back up pretty much a lot of the claims he makes as far as economic conditions are concerned. So that guy I have a lot of respect for. And he doesn't mind debating you in a calm manner and going back and forth. And pretty much half the time, he's right, half the time he's not. But I take that batting average over anybody else, including Larry Kudlow, that Trump has as his main economic advisor. And this guy, I mean, he had to be so bad that Trump had to let him go. So take whatever this guy says, not even with a grain of salt, just ignore it.
Maybe a meeting in the coming weeks between the president and the Fed chair, not entirely unheard of, although it is rare because it is obviously meant to be and remain an apolitical, independent institution. So when you hear that there could be a meeting, how do you look at that, Catherine? Could something good come out of this?
No.
Could the president get a better understanding of what the Fed's job is?
No. He fundamentally does not understand that the central bank needs to be politically independent. That is at the core of not only the U.S. financial system, but the global financial system. We have seen counterexamples from Venezuela, Argentina, Turkey, lots of other places where politicians got a hold of the printing press and you had a massive economic disaster. If Trump continues to exert political pressure on the Fed and even fire the Fed chair, which Stephen Moore has actually advocated last week on TV, which again I think is completely irresponsible, that would cause an immediate global panic. And, the people advising Trump need to tell him how critically important it is to protect the sacred political independence of the Fed. Let other outside people criticize what the Fed does. I'm allowed to criticize it. Any American is allowed to criticize it. It's completely different when someone who potentially has the power to fire the Fed chair, which would be an untested thing, when that person is going on Twitter and is floating rumors that he's going to not only fire the Fed chair, but potentially everybody on the Fed.
Stephen, quick response from you.
Well, look, I think this is a teachable moment for the American people to see this disastrous decision by the Fed that has caused this massive reduction. I mean, Catherine, this has been about $2 to $3 trillion in losses for 150 million Americans in retirement accounts. And who is the Fed responsive to, if not the president? I mean, this is one of the most powerful agencies of government.
All right, the Fed, like the Department of Justice, the Attorney General, is not supposed to be responsive to the President Donald Trump. They're supposed to be responsive to the country, in the case of the Department of Justice, to justice for the country, not justice for Donald Trump. The same goes for the Federal Reserve. They are supposed to be responsive to the economic conditions of the country, not what roly-poly President Bone Spurs thinks, particularly since when the Fed increased interest rates, Donald Trump basically has approximately, I want to say, $300 million worth of debt, and it's debt not at a fixed rate, but at a variable rate. So every time the Fed raises interest rates, that's more money out of Donald's pocket. And that's probably what he got pissed off about more than anything else.
Think it should be responsive to no one?
I'm saying it should be politically independent. It should do what the experts believe is appropriate at the time, using whatever data and theory are available to them, not what is politically expedient to the president, which is what we're seeing.
You seem to think that there's like some oracles from God that think that they know what they're doing.
No.
We had hyperinflation in the 1970s thanks to the Fed. We had this big
you were predicting hyperinflation 10 years ago when we had deflation.
So they should about the Fed, Catherine.
I know.
I'm talking about what happened in 2007 and 8.
Yeah, you know how we corrected hyperinflation? Because we had a politically independent Fed led by Paul Volcker, who was not afraid to do things that were painful and politically unpopular in the short run, including raising interest rates. That's why we need an independent Fed,
Catherine,
not one that has its arms twisted by whoever is in office.
You know what the Volcker Rule was? You know how we killed inflation? He followed commodity prices. Every time commodity prices went up, he raised interest rates, and every time commodity prices went up. Yeah, it was. That's what he did, and that's how we conquered him.
Let me stop you right there. She is absolutely right. That is not what the Volcker Rule is. And I welcome you to go look it up for yourself as to what the Volcker Rule is. But in a nutshell, it was part of the Dodd-Frank Act, which prohibited banks from making risky investment decisions. Has nothing to do with the raising and lowering of interest rates. So this guy is pulling stuff out of his ass, throwing it out there on TV, but this lady knows exactly what she's talking about. So let's bring this to the end.
And that's why
Google the Volcker Rule, people. That's not what the Volcker Rule is.
The rule right now is that we're out of time.
Okay.
All right, so they're out of time, but I just had to make this particular video because it's just another example of Joe jerk-offs that Trump has working for him that don't know their asses from a hole in the ground.